Since my first film was released, many people have asked me why they should put money into gold and silver and how they can go about doing so. The purpose of this short video is not to act as financial advice. It is designed to show you how buying gold and silver is no more mysterious than buying groceries. Just as you need groceries, you also need gold and silver. I made my first gold purchase in November 2008. I paid $1,161 for my first 1-ounce gold coin. That's $600 less per ounce than what I paid for my latest gold purchase in 2012. When you look at a gold price chart for the last 10 years, you will realize one important fact. On average, gold doubles in price every 4 years. Can you say that about the money you have in your bank account? I made my first silver purchase in January 2009. I paid $1,807 for my first 100-ounce silver bar. I now have to pay $3,200 to buy the same amount of silver. I have almost doubled my money in less than 4 years. What percentage of your investments have performed this well? I have tried different precious metals dealers over the years, and my preferred dealer is Collectibles Canada. From their store on McPhillip Street in Winnipeg, owners Sheldon and Marlene buy and sell precious metals all over the world. Let's start with the first and most important question. Why would anyone want to buy gold and silver?
Well, gold and silver is a very good hedge against inflation, I think. World conditions, the printing of money, all these things have caused silver and gold to be in high demand, and they've been traded since the beginning of time. Whether they bartered, whether they they're an actual commodity that trades on an exchange, so they have a day-to-day, up-to-the-minute market value. And people have lost faith in the dollar. You can see where the American dollar is right now. It's at one point, it was not that long ago, $1.50 Canadian. Now the Canadian dollar is stronger than the American. So people have lost a lot of faith in the U.S. Europe is in trouble, and there's just part of your portfolio should contain the physical silver and gold, not just paper, because that caused a lot of problem in the first place.
Mm-hmm. Sheldon just gave you the most important point about buying precious metals, which is to protect yourself against inflation. As governments around the world print more currency to pay debts, the value of each dollar issued is worth less. Inflation is currency devaluation. There is a tight correlation between the debt ceiling of the United States and the price of gold. You should take notice of this because you are losing money keeping your currency in a bank account. Since the United States went off a gold standard in August 1971, inflation, or money printing, has skyrocketed. In 1971, the average single-income family had more disposable income than the average dual-income family did in 2011. No wonder you can't get ahead. In 1966, a notable banker said, "In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. If there were, the government would have to make its holding illegal, as was done in the case of gold. The financial policy of the welfare state requires that there be no way for the owners of wealth to protect themselves." The notable banker who said this was former Federal Reserve Chairman Alan Greenspan. Do you think he and his successor, Ben Bernanke, are hiding this fact?
You know, the price of gold today is $1,580. The dollar during these last 3 years was devalued almost 50%. When you wake up in the morning, do you care about the price of gold?
Well, I pay attention to the price of gold, but I think it reflects a lot of things. It reflects global uncertainties. I think the reason people hold gold is as a protection against what we call tail risk, really, really bad outcomes. And to the extent that the last few years have made people more worried about the potential of a major crisis, then they have gold as a protection.
Do you think gold is money?
No.
It's not money. Even if it had been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I have a silver ounce here. And this ounce of silver back in 2006 would buy over 4 gallons of gasoline. Today it'll buy almost 11 gallons of gasoline. That's preservation of value, and that's what the market has always said should be money. Why couldn't people put this in a mattress and get 4 or 5 times much of the value in a few years? So the record of what you've done in the last 6 years is destroy the value of real money, of paper money. At the same time, real money is preserved. But what would be wrong with talking about parallel currency and competing currencies? This is something that Hayek talked about, something that I think would be a compromise, and that we could work along those views.
First of all, good to see you again, Congressman Paul. On alternative currencies, nobody prevents you from holding silver or gold if you want to. It's perfectly legal to do that. And you're also it's also perfectly fine to hold other currencies, euros or yen or whatever else. So in that respect, you can do that, and I'd be happy to talk to you about
other options. Mr. Chairman, that's not money. Even in Mexico, they're talking about this. They're trying to have competing currencies. They've been wiped out too many times with inflation and wipe out the middle class. They're allowing people to start to save in a silver currency. So I hope we move along in that direction, because there shouldn't be any overwhelming changes all of a sudden, that there could be a transition. People could vote on it. Maybe they'll give up on the Federal Reserve note and vote for real money.
I'd be very happy to talk to you about it.
Thank you very much.
Thank you.
When people choose to buy precious metals, they are often put off by the difference between the stock market price and the physical price. I'll let Sheldon handle this issue.
Okay, so let's say the spot price, which is the price that silver is trading at in New York, minute by minute, is about $35. And I walk into Collectibles Canada and I want to buy a single silver maple leaf. Why would the price be a couple dollars higher than the spot price?
Well, there's a cost. I mean, we're not giving you a piece of paper saying you're entitled to get some silver. We're physically giving you the product. So the coin or the bar, whatever the case, has to be manufactured. It has to be shipped. There's a cost of making it. And there's a bit of a profit built in. I mean, I cannot sell at spot price and buy at spot price because I'm not going to be in business to do this.
Exactly.
So there is a bit of there is a profit margin built in, a bit of it as well. And it roughly runs a couple bucks over spot price that someone is buying it for.
This leads to a third question. Let's say I decide to buy some precious metals. Then what? Once again, I'll let Sheldon answer this question.
So let's say I buy some gold and silver, and a year or two from now I want to sell it. Do I sell it back to you?
You can sell it back to me, certainly, but if you happen to be in a different location, you find... We're a distributor for the Royal Canadian Mint, so we are... having said that, we carry all their product, whether it's silver and gold or numismatic product. And you can, you have to do some due diligence and make sure that you're selling to places that you shouldn't. You make a couple phone calls. You should always be able to sell it where the silver or gold is trading at the time. Somewhat similar to selling a stock. You phone your broker, you say, what is the stock trading at? He'll say the market price or the spot price is X amount of dollars. The same applies for silver and gold. And that's what you should be receiving, not a percentage off of spot. You should always get spot and maybe a little bit more depending on what supply and demand. It's easy liquidity whether you're in Winnipeg, whether you're in Texas, whether you're in Europe. As long as you're dealing with reputable dealers, as long as you've got recognized bars, we sell Royal Canadian Mint product, whether it be maple leaf or bars. These can be traded anywhere. So the liquidity is as easy as it is to buy, it's that easy to sell.
The fourth question people usually have about precious metals is which one to buy. Should I buy gold or silver? Here's a dealer's perspective on the issue.
About a year and a half ago, it was very, very difficult to get silver, and dealers such as myself were paying more than spot just because of the difficulty in getting it. The Royal Canadian Mint could not keep up. The U.S. Mint was shut down on silver. Perth Mint was not able to keep up as well. So therefore, you know, if someone has, even a dealer is going to pay over and above what they would normally pay just because they've got buyers on the other side.
Okay, so it's a supply-demand issue, right?
It can be, certainly, and that's what happened in April, I guess, when silver had hit $50 an ounce, and people were up until that point from $35 kind of plus. It was like basically lineups in our store. People, it was a buying frenzy completely. Unfortunately, silver did take a drop down, but there's always peaks and valleys, and this isn't an overnight thing. I think, this isn't like buying a penny stock that your friend tells you about that is going to jump up and so on and so forth. This is kind of a long-term hold. This is, again, a hedge against, the future. You want to keep some about. You can always buy and sell the stuff. It's not like you're married to it and have to hold on to silver and gold forever. This is stuff that can be bought one day and sold the next, and it is that liquid, and you get your money that quickly when you do sell. But, you're always going to have peaks and valleys, and sometimes, if it takes a certain jump up, you buy it. If it falls back again, you buy it again, this type of thing.
Gold is for saving, and silver is for spending. The price appreciation of gold is a lot like flying in a 747. There are strong price increases, calm price levelings, and gentle price landings. This is because the total gold market value is about $13 trillion. The price appreciation of silver is a lot like flying in an F-16. If you like a wild price ride, silver's tiny $28 billion market may be for you. There are a lot of experts who have reason to believe that silver will outperform gold on a dollar-for-dollar basis. One of the best ways to buy precious metals is to set aside a certain amount of currency and buy whatever amount of precious metals that currency can get you every month. You can always trade up to larger bars and rolls or boxes of coins at little to no cost as your stack of precious metals grows. There is nothing like holding real money in your hand. It can't be taken away from you by the financial system like investors in the paper gold and electronic silver markets.
For our audience, MF Global, the firm, it declared bankruptcy, filed for bankruptcy. It made bad bets on European sovereign debt. But I understand you have been caught in the crossfire, actually. So what happened?
Oh, I really got burned. I got a call last Monday. I have an account with Lind Waldock, and I've been trading gold since 1978, and I have a very simple strategy. As you well know, I've been very bullish on gold for many years. So what I do is I buy a future, and I keep buying futures until I have enough money to take delivery of the contract. So I was building up my account to take delivery on a contract, and I got a call on Monday, and they said they have a margin call. I said, what are you talking about? I got a ton of money in my account. Oh, no, you don't. That money's with a trustee now. I said, who made up this decision? No, the CME Group and somebody else. They took my money out of my account, 6 figures. My money's gone, and about 150,000 other people.
If you don't hold it, you don't own it. There is a reason why the Chinese bought as much gold in 2012 as is held by the entire country of India. There is a reason why the Chinese government is encouraging its citizens to own gold and silver. Metal is money. Cash is trash. The final issue about buying precious metals is quite practical. Where do I store my precious metals? If you have a small amount, you can hide it from thieves at home. If your house burns down, you will have bigger things to worry about than your precious metals. If you have a larger amount, you can store them either in a home safe or in a safety deposit box. Some people are concerned that the government will seize people's gold from safety deposit boxes like they did in 1933 America. I wouldn't worry about that, as the sheer size of the debt can't be absorbed by all the gold available like it was in 1933, unless gold were revalued to around $20,000 per ounce. That's probably not going to happen. If you decide to store your precious metals at home, your greatest security feature is not to tell anyone. I have chosen to go public with my ownership of precious metals because I keep them in a safety deposit box stored in a bank right next to my dealer. This short video showed you why and how to buy precious metals. You were able to see what it's like to visit a dealer's store and realize that it's nothing mysterious. If you decide to do business with Sheldon and Marlene, you can reach them at Collectibles Canada. Tell them that Leonard Ulrich sent you. Please note that they do not accept checks or credit cards and prefer bank transfers. This is easy to do, and you can ask them about how to do this. If you happen to live in the province of Manitoba, be proud of the fact that you can buy and sell precious metals tax-free. Buy some real money today and keep stacking.